Hey guys, good morning. Bill Soriano from Pittsburgh. It is Sunday, August 6th, and it's time for our Smart Money Outlook session where we go through all 28 pairs in my Trading View watch list here. And what we do is we look for the daily trend bias. Once we identify the bias, we mark up a 4-hour order block that we can trade from going with that daily trend, the higher time frame trend. We find a point of interest inside of that 4-hour order block, and that's where we set our point of interest alert and wait for price to hit that alert. I show you a free indicator that can help you identify these order blocks if you're new to trading. This indicator, it's valid for me about 80% of the time. Sometimes I do find a different order block. It uses certain algorithms that eliminate higher volatility order blocks. I'm not sure how it actually does that, but since we don't trade directly from these point of interest in the 4-hour order block, we can I sometimes mark up different areas. As you know, if you watch my sessions, these order blocks must meet 3 criteria. They must lead to a break of structure. There must be an engulfing candle, and they must cause imbalance. Now, if you don't know what I'm talking about here, then you need to register for my free 9-part Smart Money Concepts video series. Send me a message. I'll send you a link to register for that. It's absolutely free. You'll get a video every day for 9 days, and you'll learn about break of structure, banker candles, imbalance, all these things that you need to know in order to follow along with my videos, because I can't explain everything from scratch as I go along. These order blocks must not have been already touched or mitigated after a break of structure occurs, obviously. And once the 4-hour point of interest alert goes off, we drop down to the 15-minute chart. We wait for our entry model, which is the lower time frame flip. Okay. And if you look in my group here, the FRX Smart Money Trading Academy group, where I post all these videos and all the chart markups and also the results. For instance, this is the results here from the month of July using our Smart Money Concept strategy. I don't know how this word push got in here. I got to fix that. Let me see something here. Smart Money strategy. Okay. We had 21 losses. I'm sorry, 21 wins and 12 losses in the month of July. A 30% gain on our account, assuming that you would have been able to take all 33 trades. I could just show you that real fast here. I thought I had these pulled up, but I didn't. This is the spreadsheet that you'll pull up if you click on that link there. And it'll show you all the wins and losses here, going down the side. And also I started putting in images of each trade after the trade completed, whether it won or lost, and also the time of day that the lower time frame flip executed. So that was July spreadsheet. You can access that in the group. And so far here in August, after 1 week, we are at 3 wins and 3 losses with a 3% gain on our trading account. So you can see the 6 trades from last week using our Smart Money Concept strategy. And I went over that. I went over all 6 of those trades yesterday here in this video right here. And I show you the reasons why we would have taken those trades and where we would have gotten in. And of course, whether or not they won or lost. And in addition to that, if you don't like watching the videos, I also post the chart markups of all those trades here in the group as well. Okay. And then, of course, every week I go over this trading. This is last week's Smart Money Concepts video, where I went over the weekly Smart Money overview forecast for the week of 7/31. Of course, today, this will be for the week of August 7th. Okay. So we're going to go through all 28 pairs here. And, I've been giving you guys this training for free for several months now. I did just start documenting it last month. Now, after this month, after the month of August here, 2023, this training, you'll no longer be able to access it for free. There will be a small fee involved to get access to it. It's kind of going to be a bonus. I'm going to require that you join me in with another company and purchase a product from that company that will help you tremendously make money online. Most people that trade Forex also are into affiliate marketing, network marketing. So this product that you're going to get access to when you join me, just 25 bucks a month is all it costs. That's all it's going to cost you. But that $25 is going to go toward this product. So you're going to get two for one deal. You're going to get access to the product, and that will give you the free bonus, which is my weekly training, which is actually daily training, really, because although I only post 2 videos in here most weeks. Some weeks I also do some live sessions as well in the group where I actually show you the trades as they go off. Okay, but you do get this video here every Sunday where we go through all 28 pairs, and you also get the video that I did yesterday where we go over the recap of all trades that occurred the week before and where we would have gotten into trades and where we would have gotten out. Okay, this is the product. This is our escape room, my escape room 0 product. And there's a short video here you watch, and this is gonna help you. There's 14 affiliate marketing escape rooms, and in order to get out of each room, you have to perform a very simple task that will help you and guide you to become a successful affiliate marketer and help you build another stream of income in as little as 30 minutes a day. So you will have to join this. It's just a $25 fee in order to get into this escape room. And then, like I said, starting in the month of August, I'm going to require that people do this in order to get my live training. If you don't want to do it, I understand, that's fine. But if you do want to continue getting access to my videos here in the group, then you're going to want to do this. This will help you create another stream of income as well. So let's get on with our weekly session here. So we're going to start at the top here, right? And what we're going to do, we removed all the flags from the pairs, but if the pairs were marked up from last week, we'll see what's in there, and then we'll remove that, obviously. So our first step here is to identify our daily trend. So the first thing we do in this session is we go to the daily chart. Okay. We can see here that the daily trend is obviously bearish. We can use these 3 indicators if we're new to help us to determine the trend. You can see the red is the 13, the green is the 62, and the blue is the 200. So you could see in a situation like this where the red is below the green and they're both below the blue, that you obviously know you have a order flow that is bearish, right? It's down, it's coming down. Now we have an order block marked up here. If we drop to the 4-hour chart, we're going to identify where do we want to put our order block. Now we're going to turn this indicator on here. This is our Smart Money Concepts Lux Algo indicator. It's absolutely free, right? And you can see here, since we have a new break of structure, we have another order block here, right here. This order block looks pretty good to me. We have an engulfing candle after it, right? And so we're looking at this banker candle here, or institutional candle. This is for a buy, you're looking for, for a sell order block, which is what this is, because the daily trend is bearish, right? We're going to trade with the daily trend, with the higher time frame trend. So since that is bearish, we're looking for the last blue candle before this down move here that leads to the break of structure and creates imbalance. So we have this candle here, you can see, and then the next candle, 2 candles after that, you get a nice push down You can use this candle here as well because this gives you an engulfing candle right after it, right? So we're going to just, what we're going to do is we're going to come up here. We're going to remove this old markup from last week, right? And so what we're going to do is we're going to set our alert. We're going to use this zone right here, but we're going to use this banker candle. We're going to use the open of this banker candle right here for our point of interest. So we're going to wait for price to hit that. And then once that happens, we'll get an email alert. And then what we do is we drop down to the 15-minute chart and we wait for a lower time frame flip. Okay. And you'll learn about that. To learn about that lower time frame flip, I show you that in this video right here. And every week when I go over the weekly recap, the trade recap for the week. So you're going to want to watch this video if you don't know what I'm talking about, as long as it refers to a lower time frame flip. I'm also going to put a more detailed video in this group here sometime this week, just showing you that more of that lower time frame flip, right? So that you understand how to find it, because sometimes it's a little bit hard to read the price action on the 15-minute chart. And that's why I make those videos every week showing you where I identify the choke, which is what we're looking for on the 15-minute chart once our point of interest is hit and all of that. But so you see here, you have this marked up. And then once we go over all the pairs, we can just turn off this indicator and then we just see our order block here, right? But for now, we're going to leave it on. Going to the next pair here, we also see again, we see this, bearish order flow here. And on the 4-hour chart, right, if we let's just remove all the drawings so we can see what's going on here. We see this nice order block right here. Okay, so this led to a break of structure, price came back. So right here, this order block has already been mitigated, right? As you could see here, we had, we didn't really have a break of structure. So, well, you get a break of structure here. Price comes up, reacts off of this order block, but it gives you another break of structure. So once that happens, now this order block is now free to be hit again. So what we'll do is we're going to mark up this candle right here. See the indicators giving us 2 zones, and we're going to take that one right there. So that's where we're looking for our alert right there. We're going to try and move through these pairs here pretty fast today, right? Again, we go to the daily chart, and in this now we see bullish order flow, right? You can see some bullish order flow here. So we're going to try to buy this. Go to the 4-hour chart. And on the 4-hour chart here, this order block here, we don't like this because we have no engulfing candle. We also have no break of structure up here. So if we're going to buy, we're going to have to come over here and we're going to have to find another order block down here that we can trade from. And here is a nice one right here. Okay, we got a nice engulfing candle and we got inbounds. So our point of interest alert is going to go there. Let's move this back over. Okay, now, well, we could see that that's already been hit. Okay, so we marked up the wrong area there, but sometimes it's hard to tell where you're at. So what we're going to do is we're going to come down to, let's delete this out of here. So we're going to need price to come down to here now. So let's add our alert right there. And let's remove this area here. Now, again, the indicator was giving us this order block here, which isn't a valid order block to me. And then it was giving us some order blocks up here to sell from. But since the higher time frame trend is bullish, we don't want to take these order blocks up here. And since this isn't a valid order block to me, we don't want to take that one. So we're going to wait for that one down there to get hit. Okay, like I said, we're going to try to move through these pretty fast here. Okay, so on the daily chart here, you have to scroll back here to see that your order flow, you can see bearish order flow, then you get some bullish order flow, but then price kind of consolidates here. Okay, so to me, what I'm looking for here is I'm looking to get a break of structure here to the downside, so that I can then identify a order block. So we have this break of structure alert right here, that was from last week, I guess. So that's still, that alarm is still on there. So we're just going to skip over this pair and we're going to wait for this break of structure alert to get hit. Now, if price comes down here during the week, we'll get the alert. And then what will happen is we'll be able to then identify a 4-hour order block to trade from. But right now, we don't have nothing there that we like. Okay. Let's just remove our drawings here. See what we got. On the daily chart, again, we had this bullish order flow. We had a choke plus coming down to the downside here, right? Which gave us some bearish order flow. And so right now, price appears to be bearish, right? The order flow on the daily appears to be bearish. You can also see the 13 below the 62 and both of them below the 200. And the indicator is giving us this order block here. But again, until I get a break of structure right here, right? Till price breaks structure to the downside here, I wouldn't want to trade from this particular order block. So we're going to come up to this order block right here because this one is valid order block. We have a break of structure, we have an engulfing candle, and we have imbalance. So we'll mark up that zone, and then we're going to use the open of that banker candle right there. See, this is the last up candle before this down move that creates the break of structure and the imbalance. And so that's where we're going to put our point of interest on the open of that banker or institutional candle, whatever you want to call it. Again, if you don't know what I'm talking about, you need to register for my free Smart Money, 9-part Smart Money video concepts training series, right? Video series. So there you have that. Let's get into the CAD pairs here. Oh, wait a second here, did I think I marked that up on the wrong chart? Yeah, we want to go to the daily chart here. Yes, so I was on the daily chart there, so I marked that up wrong. As you could see here on the 4-hour chart, this order block right here, I don't like it because there's no engulfing candle after it. Okay. So sometimes what you can do is you can highlight this 4-hour zone because that's where you want to trade from, but you can drop down to the 1-hour to see if you have a better looking candle, and we just don't. We don't have a better looking candle here. Okay. So again, let me go back to the daily because I marked up this zone here incorrectly. So now, let me get rid of this. We have this zone up here. Again, that looks like a blue candle. That's definitely a blue candle, not a red candle. So that would be the engulfing candle right after it. So we'll put our point of interest right there. Okay, and now let's go to CAD Chef. Okay, CAD Chef on the daily chart, again, appears to be, you have very bearish order flow. You drop down to the 4-hour. We have this area here from last week that we marked up that we're still waiting to get hit. Okay, so this area is not a valid order block to me. We need a break of structure down here. Same thing with this area. So here was where we got our break of structure, right? Which is why we have that area marked up. CADJPY. Again, we have bullish order flow here. So let's remove the drawings, drop down to the 4-hour. So again, this area here was already mitigated. We did get a break of structure to the upside. So that means that we can use this area again now, right here. And so what we'll do is we're just going to mark up this whole area here. And we will put our point of interest alert right at the open of this red candle, which is the last down candle before the move up, which breaks structure, right? And causes imbalance. So price is pretty close to this, so we have a good chance of it hitting it, right? And again, we said that the daily order flow was bullish, right? And it is. So that's why we're looking to trade from an order block, from a bullish order block. And we're not looking at any of these bearish order blocks up here that the indicator is giving us, because we want to trade with the higher time frame trend, which is the daily trend. Okay. And like I said, once you shut this indicator off, you'll just have your order block that you'll be able to see. CHFJPY, very, very bullish, as you can see here. Let's see if we can remove the drawings here. So on the 4-hour, again, we don't get a break of structure to the upside here. So this area was already mitigated, right? And so now we would need price to come down lower before we would look to buy. But what I would rather do is, because the chances of that happening, it has to make a pretty good move down, right? What I do is I set a break of structure alert up here. Okay, so instead of setting an order block, we can't really identify our 4-hour order block right now. So what happens is this: we're going to wait to see if price breaks structure to the upside, and then we'll be able to identify an order block down here. Once we get that alert, we come to the chart, we see, oh, okay, it's not an order block alert to trade from, it's a break of structure alert. That allows us then to set an alert, our point of interest alert here on the 4-hour chart. So there's nothing we can do until that happens. Now, if price does decide to move down here lower, we have this order block here, but I don't like it because I don't have an engulfing candle after my red banker candle, right? Since this is a buy, an order block to buy from, a bullish order block, this institutional candle is the last down candle before the up move that causes this break of structure and leaves imbalance. So the next candle after that is not an engulfing candle. So to me, this isn't a high probability order block. It's a low probability order block to trade from. Okay, so I'm going to wait for something to break structure to the upside here. Now let's move to the EUR pairs, the Euro pairs here. Again, this is, you can see this is bullish order flow. Let's just remove our drawings real fast. We'll drop down to the 4-hour. Okay, no break of structure here. Remember, to get a break of structure, we need the body of the candle to close above or below the highest or lowest wick prior to that. So that's how we identify a break of structure. So we have a break of structure here. We have this order block down here, which is obviously valid. We have a nice big engulfing candle after our banker candle there. So let's see. Now what we're going to do is we're going to use, we're going to put a couple of these order blocks together here to identify this zone, okay? Because if price moves down lower, we don't want to invalidate this order block because we have these order blocks down below it as well. However, we're going to put our point of interest right here, okay? So our alert goes there. Now, if we remove the indicator here, we could see that if price does move down lower here, it's not going to invalidate this trade for us because we have an order block down here too. Let's move on to EURCAD. EURCAD on the daily chart, we would have to say that that is bullish, right? Looking at the 4-hour. Right, so we have these order blocks inside here. So right here, you do get a break of structure to the upside. That would validate this order block here. We do have a candle in here that gives us a engulfing candle after it. So we can mark this order block here, and then we can put our point of interest alert right here on the open of that red candle. And that's what we have there. Right? So now there is another order block down here, but I'm not real happy with it because we don't have an engulfing candle. This would be our last down candle before this giant up move here. But we could say that this is actually the last down candle. And since this is actually the last down candle before the up move, we could identify another order block here, right? So what may very well happen in this case is we may find that that price may come down, hit our point of interest alert. You know, it might try to make a move back up to give us our choke or break of structure, and then more than likely it's going to move down into this order block down here. So we'll leave that here just to see if that's what, and it doesn't indeed happen. Okay, the daily, we have bearish order flow on the daily. Let's just remove all the drawings on this one and see what we have. So again, we have this area. This area here was already mitigated. We didn't get a new break of structure. So again, we would have to go higher to get into this trade. But what I would rather do here is if I can get a break of structure to a downside, if I can set like a break of structure alert here. Then I can wait for price to move down here. And then once that happens, you know, we can identify an order block up here to trade down from. Okay, but right now I can't really mark up an order block on this because as you can see here, we had this order block here, you know, but we had a break of structure, then the order block was mitigated, right? It was already touched and price reacted off of it. So there was already a trade here. This was actually probably a trade from last week, if I'm not mistaken, right? EURCHF, let's just see. Yeah, this was an EURCHF trade that we ended up as a losing trade. So now we're not going to trade from this area again unless we get a break of structure, right? unless we get a break of structure. Okay, let's see what we're looking at here. This is obviously bearish order flow coming down. And on the 4-hour chart, we have kind of the same situation here. We have, this area here has already been hit, right? So we have an area here that's a little bit higher up. And here, the break of structure comes back and gets hit. This area here really doesn't get mitigated before the break of structure. So that's hit. We're going to identify this candle right here. So we did get this break of structure, comes back and mitigates that candle, right? So I don't like that. Okay, let's just pass on this pair for this week. Sometimes I just pass on a pair if I don't like what I see. We have 28 pairs here, guys, right? We had 32 trades go off in the month of July. So far, with just 1 week, 32 is a lot. That was a lot of trades in the month of July. Now, so far in the first week of August, we had 6 trades go off. So if you do an average of 5 or 6 per week, that's 20 to 30 trades a month that you're going to have access to. So we don't have to set an alert on every pair if we don't like the way it looks, right? I don't like the way that looks, so let's just skip it for this week. Here on EURJPY, we have bullish order flow. Drop down here to the 4-hour. We have this area still marked up down here from last week. Okay, so right here, as you see here, we get this break of structure here to the upside. Now, this is an internal break of structure, so some people would look. We're looking for this to break structure up here before we can identify these other order blocks, but that's not necessarily true. Right here, we have, what looks to be a valid order block for me because we get a break of structure, we have imbalance. So we're going to look to trade from this area right here this week. Now you can see price did wick down into this area, but it don't look like it hit our point of interest yet. Our point of interest is a little bit lower. So we're going to put our alert right there. That's where we're going to look to take our trade. We're going to look for price to come down into this area and then react off of it, get our lower time frame flip, right? Which would be what? We have to get a move up probably above this area here to get that break of structure. And then we'd need price to come back down, right? Just to show you real quickly here. We get that break of structure to the upside after we got the break of structure to the downside here, right? Which gives us our point of interest. And then price would come back, mitigate this area here. We could get in our trade and go up. So let's see if that's what happens this week. EURNZD, we have bullish order flow here, very bullish order flow. Let's just remove our drawing and see what we have here. So again, we didn't get this break of structure up here, but we do get a break of structure here. And that leaves us this candle right here with a big engulfing after it and some imbalance. Now, the indicator is not giving us this area because it's a more volatile area. It uses different algorithms, the indicator, or whatever, however it's built into it. There's some volatility built into it. And so it does skip over certain areas. Like I told you, it's correct though about 80% of the time. But for me, I'm going to set my alert right here. And again, since we don't trade right off of this 4-hour point of interest, some people trade off these 4-hour points of interest. They set their limit order right there on the 4-hour. We don't do that. When our point of interest gets hit, we drop down to the 15-minute and we wait for our confirmation, which is a lower time frame flip, right? And then that gives us our ability to set our limit order after we get that choke in the lower time frame flip. So let's set our alert right there. GBP USD. The daily chart is definitely bearish. Drop down to the 4-hour. I'm sorry, that was bullish, not bearish. That's definitely bullish. Drop down to the 4-hour and let's get rid of some of the drawings here. It looks like this order block here was hit and reacted off of. So now we're going to wait for this to come down a little bit lower here. We have this order block here. We have another point of interest right here, which looks like it may have been hit. So we don't really have to set an alert here because this was hit. So what we're going to do is we're going to put a blue flag on GBP USD, and that's going to tell us that our alert has already been hit. And so we can look for our lower time frame flip here on the 15-minute chart. Okay. So what it looks like to me here is, and once you get your lower time frame flip, you can also use this indicator to help you identify where you're going to set the order block to set your limit order at. And you can see here that it's giving us this order block right here. Okay. So, oh, excuse me. So when price made this low, okay, we would need to set our break of structure for the choke right here. And of course, we get that right here. Price comes back down, probably mitigated these areas here. So it kind of looks like to me that this trade is already kind of happened. So we're gonna have to look for, we're gonna skip over this pair for this week. EUR USD. This is bullish order flow. We have this order block right here. It's giving us this order block right here. This break of structure here is kind of weak. Okay. So I would need price to break this structure up here. So I can set myself a break of structure alert right here. And then this way, so what happens here, we can get price to come down to here and take it up, or we can get a break of structure to the upside, and then we'd be able to identify probably this order block right here, right? So if we would get this, we would get that break of structure to the upside, right? Then that would allow us to identify this order block right here to trade from, right? Or price can just continue to move down and we could trade off of this order block. So we'll kind of have to see what happens, right? GBP, now we're into the GBP pairs, GBP AUD, very bullish on the daily. All right, we have an order block right here marked up for us. Yeah, let's stick with this. We have this nice engulfing candle and all this imbalance down here. So we're going to need to stick with this order block. That this would be the actual last down candle before the up move. So our point of interest would go right there. GBP CAD on the daily. We're bullish on the daily, right? 4 hour. Looks like we have this point of interest down here. Looks like this was already hit. So again, this is a situation where we could put a break of structure alert up here somewhere, maybe a little bit lower. So we could have a situation where, again, price comes down to here or it goes up to here and we identify a new order block. Let's see here. What do we got here? This looks to be bearish, right? So you had the big push down and then it kind of tried to come up, but then it just kind of consolidated. Big consolidations there, huh? Big consolidations. This looks bearish to me. But I need to get a break of structure down here in order to use any of these order blocks. This break of structure here is not enough for me. That's not enough. I'm going to set a break of structure alert down here. And I'm going to wait for price to come down to here. And then if it does that, we should be able to identify an order block up in here somewhere, right? If that happens, right? If that don't happen, we're not going to trade. Not a big fan of this order block right here. So let's just do that for now. GBP JPY. Oh, again, I think I made a mistake there. I'm sorry about that. Oh no, we're good. This break of structure can be there. Okay, GBP JPY. This is very, very bullish. Look at that. On the 4-hour chart, oh, we did get a break of structure here, so that would allow us to trade from this order block right here, right, with our point of interest going right there. Point of interest alert going right there. GBP NZD is next. On the daily chart, we're very, very bullish again. Drop down to the 4-hour. We did not get a break of structure. You see how we have this break of structure alert here? Also, well, we do actually get a break of structure right here. So once that happens, that allows us to identify this area right in here, which has already been hit with this wick. So we're going to drop down to the next order block and wait to see if that gets hit. So again, two things can happen here. Price can come down, right? And hit our alert down here, and then try to wait for a lower time frame flip to take it up, right? Or we can get this break of structure here, another break to the upside here, and then we'd be able to identify this order block down here to trade from. So either way is good. NZD CAD. We have bearish order flow here, drop down to the daily. We have some lines drawn here. We're looking for something to happen. It looks like last week didn't happen. So again, we have this order block right here marked up that we're waiting for price to come up and hit. Now we did get a break of structure to the downside here. So that gives us this order block, which I don't like because I don't have the engulfing candle and there's not any imbalance. So we're going to leave this is our more high probability. It's a higher probability order block up here. NZD Chef. Very, very bearish order flow here. This has been bearish. We got this break of structure to a downside, gives us a couple different areas to trade from, right? This area was already touched and reacted off of. Same thing here. So we're going to use the higher probability order block, which is up here in the more extreme one, we would say. So that gives us a new order block. We can get rid of this one over here. NZD-JPY. We have bullish order flow on the daily. Right, so we had, that's not an order block there that's given us. Our order block seems to be down here further over. As you can see over there, we're waiting for price to come down to there. Now, of course, the other thing that can happen is what? Price can move all the way up to here and break structure. We're just going to leave this one set as it is. NZD USD. The daily appears to be bearish. Let's drop down to the 4-hour. Let's remove our drawings here and see what we can pick up. We have an order block right here, but we don't have an engulfing candle. We also don't have one here or here. So what I would do in this case is I would draw out this 4-hour area here. I would drop down to the 1-hour chart to see if I can find a better candle, and I really can't. Can't find anything there. Don't see anything I like there, right? So if I come up here to the next area, drop down to the 1-hour, right? Kind of zoom into this area here. And so right here, I can see this consolidation. I could see a nice engulfing candle right here. So that would allow me to set my point of interest on this 1-hour candle. But again, the 1-hour candle is inside of, it's inside of this 4-hour order block. Okay. So, and again, once you remove this indicator, you'll just see this. So that's what we're waiting for there. USD CAD, we got the 3 more pairs left here. The USD pairs. This has been bearish, as you can see. Right, order flow has been bearish. If we drop down to the 4-hour, But see, that area there has already been hit. Probably gonna have to come down to this area right here, which break of structure, not really. Huh. Look at all the imbalance going up here. So I were to pick this candle right here, for instance. Let me just see what this looks like when I scroll back over. Now you can see these wicks going up into there, but you don't really have a break of structure until this candle here. So it doesn't appear that this area has already been mitigated, or liquidated is another term for mitigated, meaning that the banks and institutions have already come back and lessened their position. So there's no reason for them to come back again. And if they do, then they may just be coming back to go higher and get all of this liquidation, all of this money up here. But because they got all this imbalance that they eventually have to fill. But we don't know when they're going to do that. So if we set our point of interest right there, we could possibly get a trade down and make our profit before price does move up to fill the rest of that imbalance. So we're going to stay right there. No flag. USD CHF. Daily is bearish. See if we can remove these drawings here. And oh, this order block right here looks good. This order block right here also looks good to me. We have some imbalance, so we have a couple different order blocks we can choose from here. That hasn't been hit yet. So we can put our alert there, right? And the last pair, USD JPY, guys. So we've gone through all 28 pairs now. Let's see what we're looking at on the daily chart. Very bullish, right? Very bullish on the daily. Let's try to remove some of these drawings here. Let's see what we're looking at. Well, we got a break of structure. We got a couple different areas we could trade from, right? Here's a candle here, nice engulfing candle after it. Here's another one down here. The indicator looks like it wants to come all the way down to here. Now, but we are going to select this candle. And the reason why we can do this, guys, is, again, there's a little bit, the indicator is sensing a little bit more volatility in this area. So it's not marking up this area for us. But again, we don't trade directly from this point of interest. We drop down to the 15-minute and wait for our confirmation, which is a lower time frame flip. So since we do that, we can take the trades from some of these more what they're called decisional areas, rather than waiting for the extreme areas to get hit, right? So there it is. What we've done is we've gone through all 28 pairs here. We've identified the daily trend bias on all of them. We marked up the 4-hour order blocks, right, to trade with the daily trend bias. Now, some pairs we weren't able to mark up the order blocks. We had to set a break of structure alert, and then once that goes off during the week, I'll be able to come back to the chart. I'll be able to identify a 4-hour order block and mark up the point of interest. We set alerts at the 4-hour point of interest, right? There was one pair, I think, where we had to drop down to the 1-hour chart to find the point of interest, right? Because we couldn't find that engulfing candle on the 4-hour. We used a free indicator to help us, but again, it's right about 80% of the time. 75, 80% of the time, but there is that 20 to 25% of the time where I decide to go with a different area. The order blocks met 3 criteria. They led to break of structure. There was an engulfing candle and they caused imbalance. Again, if you don't know what that is, you have to let me know. I'll send you a link to register for my free 9-part Smart Money Concepts video series, where you'll get 1 video a day for 9 days, show you exactly all this stuff, right? And then once that 4-hour point of interest gets hit during the week, I drop down a 15-minute chart, wait for a lower time frame flip entry model, and I show you that on the video right here in the group. Where did we go to here? Let's see something here. Inside the group here, I did this Smart Money Trade recap yesterday from last week. And so you'll see how that lower time frame flip works when you watch this video here. So again, this is the free training that I provide for you guys, and in the group here for Smart Money Trading Academy group. And again, once I've been doing this for free, but starting in September, you're going to have to join me here in my Escape Room Zero, just $25 a month. And once you do that, then you'll continue to get access to my free training here, my free Smart Money Concepts trading strategy that I do here. So it's free until the end of the month, but then in September there's going to be a $25 fee by joining my Escape Plan Room Zero. If you're ready to join that now, let me know and I'll send you the link to it. Maybe I'll drop the link down here in the group ahead of time so that you guys that want to check that out can get that now, and then you'll be set for next month. You'll get access to the new group that I create where I'll be just posting these videos, where I go over all 28 pairs and where I go over the trade alerts, and where you'll be able to see all the trades that we took here in the month of July, 21 wins, 12 losses. And so far here in the month of August, we're 3 wins, 3 losses. Since we take a 1 to 2 risk to reward ratio on every trade, right? We risk 1% to get 2%, right? So we either lose 1% or we make 2%. There's nowhere in between, okay? And because of that, we're able to lose 2 out of 3 trades and still break even, right? If we win 40% of our trades, we can make money. So if we win just 4 out of 10, we can make money. Last month, we won 64% of our trades, so almost 6.5 out of 10. And so far this month, we're at 50% with a 3% gain on our trading account. So that's what it looks like, guys. Bill Soriano from Pittsburgh. Have a great week.